clear that the CFPB suffers from a crisis of legitimacy. This must be corrected if the CFPB is to reliably do what it's supposed to do, look out for the American consumer. To that noble end, the CFPB needs to be made accountable to our elected officials, and its past excesses need to come to an end.
That was President Trump's nominee for head of the Consumer Financial Protection Bureau speaking to the Senate Banking Committee yesterday, pledging he will follow the law and execute functions required by congressional statutes if confirmed as head of the agency. Despite that, employees of the agency claiming Elon Musk, DOGE, and the Trump administration planning to fire the majority of the agency's 1,700 employees. Staff say that DOGE and CFPB leadership met this month to discuss 3 phases of those layoffs, which you can see on your screen here. Moving forward here, we are speaking with Rohit Chopra, former head of the Consumer Financial Protection Bureau under President Biden. Rohit, great to have you on here. I want to jump in because we don't have a ton of time left. The Trump administration has cut back on the CFPB, shutting down offices, laying off staff. What is your biggest concern?
Well, I'm really worried about this effort to defund all of the police that look after Wall Street and big tech. You know, yesterday we heard that the CFPB essentially issued a series of corporate pardons, including to big companies like Capital One and a Berkshire Hathaway subsidiary accused of illegal lending. So there's big questions right now as to whether the market is going to shift on from meaningful competition to really figuring out how to bend the rules, cheat, and sidestep accountability.
And what do you think consumers need to know about the risks to them personally with these scalebacks, especially given that under your purview in the CFPB, you were tough on enforcement, and now it seems that things are moving in the opposite direction?
Well, a lot more is going to shift to individual consumers where there are so many scams, there are so many ways in which our personal data is being heisted, essentially. So I don't have good advice other than to say, why on earth would we want a situation like this? President Trump actually campaigned on capping credit card interest rates, which I agree have really gotten out of control and are not really based on market interest rates or risks. It just seems almost predatory now. But instead, Capital One is getting a pardon, and the law enforcement agency that oversees the credit card industry is essentially being benched and sent home.
I know that you were also the FTC commissioner back in 2018, which of course was under President Trump's first term in office. What can you tell investors listening about what regulation might look like under Trump 2.0?
It's really interesting. I think a lot of investors are really scratching their head right now because I think they were really focused on a different regulatory environment where maybe certain things would be less stringent. But now what they're facing is just lots of chaos and questions. We're seeing a lot of indicators, not just consumer confidence, but business decision makers not really know, are we really heading into more uncertainty and fragility for the economy? So I think investors really have a lot to work through, and my hope is that there is not going to be a marketplace that incentivizes scam artists and fraudsters rather than honesty and competition.
All right, Rohit, we have to leave it there, but I really hope you'll come back with us and we can talk a little bit longer because we'd love to get more of your insights, especially about big tech coming into Washington. So thank you for making time for us this Friday morning. We appreciate it.
Thanks again.